Because the Fed's primary goal is to control inflation, this number heavily influences their decisions on interest rates. Notes that the S&P 500 is already at its year-end target of 6,600 points, and it will be a key point for the price to make a reversal or maybe to try a breakout. Hello and welcome. I'm Isa Martinez, a trader and market analyst here at Xchief. While stocks markets are hitting all-time highs, fueled by the Federal Reserve's recent rate cuts, key economic data this week, from inflation numbers to employment figures, could introduce significant volatility. Is this rally sustainable, or is a major shift just around the corner? Let's break down what you need to know. Let's take a look at the key economic events scheduled for the upcoming week that could bring some volatility to the markets. Don't forget the hours you're going to see are based on the New York time zone. The week starts off a bit quiet, but things pick up on Tuesday, September 23rd. At 9:30 a.m., we have a pair of important releases out of the Eurozone, specifically Germany. We'll be watching the German flash manufacturing and services PMI figures. These reports are essentially a health check on the manufacturing and services sector of the economy. Because Germany is the largest economy in the Eurozone, a strong or weak reading here can give us a good early indication of the economic health of the entire region and can certainly move the euro. Later that same day at 3:45 p.m. our attention shifts to the United States for their version of the same report, the US flash manufacturing and services PMI. Just like the German data, these numbers give us a snapshot of how busy the US manufacturing and service industries are. A strong number suggests the economy is expanding, which is typically good for the US dollar, while a weak number can signal a slowdown. Then on Thursday, September 25th at 2:30 p.m. we have two key US data points releasing at the same time. The first is the final GDP number. GDP, or gross domestic product, is the broadest measure of a country's economic activity. This final reading confirms the growth rate of the US economy during the previous quarter. While it's a look back, a significant revision from the previous estimates can still cause market reaction, as it cements the picture of economic health. Simultaneously, we'll get the weekly unemployment claims. This report tells us how many people filed for unemployment benefits for the first time. It's a very timely indicator of the health of the labor market. A rising number of claims can be a negative sign for the economy, suggesting that companies might be laying off workers, which could weaken the dollar. Conversely, a falling number is a sign of a strong job market. Finally, we close out the week on Friday, September 26th, with a very important inflation reading from the US at 2:30 p.m. The core PCE price index. PCE stands for personal consumption expenditures, and this is the Federal Reserve's preferred measure of inflation. The core version is especially important because it strips out the volatile food and energy prices, giving a clearer picture of the underlying inflation trend. Because the Fed's primary goal is to control inflation, this number heavily influences their decisions on interest rates. A higher than expected reading could lead to a speculation about interest rate hikes, which is typically bullish for the US dollar, while a lower reading could have the opposite effect. Now let's talk about the most important fundamentals of the past week. The stock markets are continuing to set all-time highs, and it looks like the Federal Reserve has just given them another reason to keep climbing. The US Central Bank cut interest rates by a quarter point this Wednesday and, most importantly, signaled that we are likely to see two more reductions before the end of the year. Fed Chair Jerome Powell described it as a risk management move to cushion a labor market that is beginning to show signs of weakness. This action has reinforced Wall Street conviction that the bull rally is not over yet. In fact, historical data supports this optimism. According to an analysis going back to the 1980s, when the Fed has cut rates with the S&P 500 near its record highs, the index has ended up rising 90% of the time over the following year. This is the key piece of data and explains why major banks like Wells Fargo, Barclays, and Deutsche Bank have been raising their price targets for the S&P 500, pointing to three pillars: corporate earnings that remain strong, the investment cycle in artificial intelligence, and of course, a more flexible policy from the Fed. However, it's not all smooth sailing, and we need to be cautious in the short term. Some strategists are warning that volatility could increase. For example, the Bank City notes that the S&P 500 is already at its year-end recent target of 6,600 points, suggesting it is fairly valued. The next major test will be the third quarter earnings seasons. Other technical analysts are seeing signs of exhaustion, especially in the Nasdaq 100, which could indicate a short-term correction in the tech sector before a larger move higher. To finish, it is crucial to remember Powell's own warning: there are no risk-free paths now. The Fed is cutting rates in an environment where inflation is still above its target and the labor market is losing steam, creating a complex landscape that investors must navigate carefully. Now let's continue with the technical analysis of the assets we see week by week, and we will start as always with the DXY. The first thing we need to understand is that we had a manipulation of a support we had at 96.377. After this, we had a very strong movement, upward movement, that is trying to reach the next liquidity point that is located here at 98.087. From this part, if we have a breakout of this point, we could expect higher movements for the DXY, and that means that the dollar can gain strength throughout this week. The next bullish targets we have are located at 98.421 and 98.693. Let's continue with the S&P 500, and don't forget that there are institutions like Citi which established a final target for the S&P 500 located at 6,600, and as you can see, we are above that point. The next point, at least for us, is located at 6,803, and it will be a key point for the price to make a reversal or maybe to try a breakout to get a throwback from this point, which means that we can have something like this: breakout, throwback, which is basically a correction, trying to make this point as a support, and then the price can continue an upward movement. On the other hand, if we are considering bearish targets for this week, we need to see where is the liquidity. The first point I could consider for this week is located here at 6,550. Next one, 6,516. A third objective here, 6,443. And finally, one of the supports that we were considering last time, the last 2 weeks, that is located at $6,343. Next, we're going to talk about the Euro USD. As you can see, a movement that is highly related to the DXY, which is the strength of the dollar. For now, we're seeing a reaction in this support, which is located here at 1.17304. It's important to understand if this support is enough for the price to have a rebound in this point, a rebound that can lead the price of the Euro USD to bullish targets. The first bullish target is located at 1.17889, second one 1.18299, two important targets for this week. And the last one, considering the bodies of these candles, 1.18646. On the other hand, if we are seeing that the dollar is getting stronger and so the euro is getting weaker, maybe we can also consider bearish targets. First of all, we need to do a breakout of this support, 1.17304, and then we can expect a downward movement that can lead the price to the first bearish target 1.17013 and the last bearish target 1.16608. Obviously, we have established before other targets for the price, but these two are the most important for this week. Finally, we have Bitcoin. We had a very strong reaction, a downward movement that started once Bitcoin touched 117,208. This is the most important price for Bitcoin if you are considering an upward movement. If the price doesn't break this point, we will expect for Bitcoin that we can have a downward movement for the next week. So bearish targets for Bitcoin I located here, 114,724, next one 114,395, and finally one price zone that is very important for the price of Bitcoin, $113,480 for this week. Most importantly, as I'm telling you, is this point of the price, because if we get a breakout from this point of the price and if the price tries to be here and make a consolidation, it's highly probable that the price of Bitcoin can continue to make an upward movement. You can confirm this with your own strategy, or maybe you can confirm this with volume in order to have a new trade with Bitcoin. And that concludes our analysis for this week. To apply these insights to your own trading, be sure to open an account with Xchief using the link in the description below. If you found this video helpful, please give it a like and subscribe to our channel for more market analysis. Thank you for watching.